What is up, everybody? Charlene FX, your favorite female trader, back with another video. I was supposed to drop this video a couple weeks ago, actually, and I'm a little behind on that, so I decided to jump into it with you guys this week. We're going to be talking about scaling in versus stacking. It was very surprising to me when I dropped this question on my Instagram. What people preferred, scaling in, stacking orders, and whatnot. And a lot of people didn't know what they were. They were like, Charlene, what's scaling in? What is stacking? What is that? So I'm going to go over that in brief detail today for you guys to really get an understanding of what the differences are, what styles of trading go best with each style, and basically what style that I use, right? Which most of you might already know, but we're going to get into that a little bit later, okay? So real quick, before we get into that, let's jump into the sponsor of this video, which is my broker, Hanco Trade. All right, they offer MetaTrader 4 and MetaTrader 5. They offer just about all Forex pairs, commodities, indices, crypto, anything that you trade. They have it 4.9 on Trustpilot, which is excellent. Pretty much they service just about everybody worldwide. There's only a couple that they don't, but for the most part, you should be fine. ECN and ECN Plus accounts, excellent customer service, low spreads, low commissions, and they're just awesome. I really don't know what else more to say about them. They're a really great broker. I mean, the deposits, the withdrawals are excellent. The customer service is great. Don't really need it that much because I haven't had any issues with them, but just an excellent overall broker. All right, if you guys want a broker, guys, check out my broker. These are who I use. This is the best one out there. You can't go wrong with them. All right. So let's get into what is scaling versus what is stacking. First off, we're going to talk about what the difference between them is. Okay, and the first thing I'm going to talk about is scaling in. All right, when you're talking about scaling in, guys, basically what that means is when you're following what you think, basically what market structure is telling you, you're looking for the direction of the market and you're trying to find your bias. You're trying to find, what you think the market is going to do and how are you able to capitalize on that? Okay, so basically what scaling in is let's say the market is pushing bearish, right? Let's say we're looking right here and the market is pushing bearish. So you're saying to yourself, all right, the market is pushing bearish, no big deal. I want to be looking for sells. Okay, so if I have a level of support that's forming right about there and I'm looking for sells, I have a break of structure here, I have a retest that just formed here. If I'm looking to scale into this order, right, I'm saying the market is going bearish, so I'm looking for sells. If you're looking for sells, you should be looking for price to make resistance levels. Okay, the more resistance levels you find, the more entries you're able to take, and that's how you're able to scale into your order. All right, so let's look at this drop right here on the 1 hour time frame. All right, so we have market pushing bearish and we're saying, okay, we're looking for sells. So typically you're looking for resistances to be formed. If your first order is right here, right, this is what scaling in is. All right, if your first order is there and you're looking for short positions there, obviously your entry is going to be here. Your stop loss can be a little bit above this resistance area here. And let's say, you want to take this trade all the way down to here, right? So if you're taking a trade from this high, let's say to this low right here, let's say, for example, sake, this is your TP area. How do you scale into this order, right? How do you scale in? Well, basically, guys, you're scaling in by just adding positions at major structural levels. All right. So if you have your first position right here, your next scaling position should be at your next major structural level, which is right here. That should be a second position. So you have this first position here, and then another position right here, right? And then that position typically, guys, is your stop loss is usually a little bit near your first position's entry, or a stop loss, I should say, because you don't want to make it tight so that if it does pull back on you to a certain degree, you get stopped out before the move even takes off. Okay, so your second position would be there. Let's say you're scaling in for a third position, right? Your third position would be at the next major level, right? So we have a high, we have a low, we have a high, we have a low, and we have another high right here, right? So your next position would be right there, and then you would simply enter right there, place your stops, wherever you want to put them right here, and then your TP is there. So now you actually have 1, 2, 3 positions scaled in to this move. Okay, you're scaling in as the move is already taking off. You're scaling it at major structural levels. And the structural levels you should be entering at are your highs. If the market is pushing bearish, you should be taking sells at a high and not a low. You don't want to enter a sell here and then enter another sell here, because if you do, this position will be in drawdown before it enters into profit. Your first position that you take should be your best position, number one. And number two, if you're using different lot sizes, it should be your largest lot size. Just in case your next position that you take tends to go into a little bit of drawdown, you have some floating equity from your first position that's going to kind of cushion this position here. And then when this position goes into profit, and let's say you take a third position, that third position will always be protected by the second position and then the first position as well. Okay, so that's pretty much in a nutshell what scaling in pretty much is. You're just scaling into the move. You're kind of grabbing more positions in a move that's already taking off in a particular direction, thus maximizing your profit potential on that move. And when you're talking about scaling in, guys, you're talking about more the style of intraday trading and swing trading as well. Swing trading, intraday, those are your more popular styles of trading for scaling in, because you're holding the move for an extended amount of time. There's going to be structure within that move, and you can find good opportunities to take more positions within that move if you're right about the entirety of the trade. Okay, so let's talk about stacking. All right, what's the difference with stacking orders? All right, so if we're stacking versus scaling in, stacking is more the style, and this is just my opinion, guys. Stacking is more the style of for like scalpers, right? Because like when you're scalping the market, you're not in the market for very long. You're not catching an entire move when you're scalping. You're only catching a portion of a particular move. So if we're looking at the 1 hour time frame here, and we see that price is making lower lows and lower highs, when we get in for sell positions in here, you're usually taking your positions back to back, back to back to back. Okay, so if you're entering, let's say, shorts here, you got a position right there, you got another position maybe right here, right? And maybe you have another position right there. And let's say your TP's right here. All three TPs are going to be just about the same, right? Some of them could be before, like your first position, your TP could be somewhere like right here because you got in at a better price. And then your second position, same thing. Your third position could be your final TP, right, for that particular move. Okay, so basically when you're stacking orders, guys, you're stacking positions in the same position, the same place, as opposed to scaling in, where you're entering at structural levels trying to catch an entire move. You're trying to grab more out of a smaller move than you are out of a bigger move. Okay, so stacking is a bit more risky, I would say, than scaling in, simply because you're entering multiple positions in one spot of the market or one price, and you're anticipating for price to continue in that direction. If price retraces on you, all three positions are more than likely going to be in drawdown, which means you're adding a lot more risk to your account. So that means that you don't really want to add positions until you know that the trade is ready to take off in your direction. You can stay in a little bit of drawdown, but you don't want it to go into like crazy drawdown, because you're going to take major losses on your account, right? So you don't want to do that. So scaling in is definitely the way to go if you're more intraday or swing trading and stuff like that, to add a little bit less risk to your account, especially with lot sizes and whatnot. But for the most part, if you're stacking your orders, you want to make sure that you're in and out of the market relatively quickly, because if you're not and the market retraces on you at any point, it may cause your all however many orders you have open to go into drawdown, and then you're adding more risk to your account, and you're more likely to potentially close out the trade, because you not only have one position that's going against you, you have multiple. Okay, which is sometimes hard to stomach. It messes with your psychology. It kind of makes you iffy, and then not at the very least you're taking a hit on your account financially. Okay, and you don't want to do that. All right, so the main difference is with stacking and scaling in is just where you place the orders. Basically, with stacking, you're basically placing your orders all in the same place or relatively around the same area. And with scaling in, your orders could be maybe 40, 50, 60 pips apart sometimes, depending on what pair you trade and stuff like that, depending on the structural level. So let's say, for instance, if you're stacking in here, and let's say you took an entry at this point here, this structural movement here came down about 100 pips. So this move here, if you were to take another position here, let's say you took a position here, which you shouldn't, but if you were to take a sell position down here, your spread from your second position, from your first position, is 100 pips. All right. So instead of taking it at the low, which you should be taking it at a high, in reality, your second position should only be about 55, 56 pips from your first position. So in this example here, you're about 50 pips apart from that one. And if you were to take a second position at the next major structural high, you're about another 70 pips from that one. All right. So with stacking, you're maybe 1, 2, 3, 4, 5 pips away. Each order is that much away from each other, if not less. And on scaling in, you're a lot more further apart, and you're holding your moves for way longer than that. Okay, so it all depends on your style of trading, how much risk you're willing to put on your account. Oh, and another thing with stacking your positions, most people that I know, like me myself, with the way I trade, majority of my stacked positions are the same lot size. You can use different lot sizes if you like, but rule of thumb is to make your first position always your biggest, no matter what style that you trade, and whether or not you're scaling in or you're stacking. You want each lot size for that first position to be the biggest. Okay, because if you open up a second, a third, a fourth, a fifth position, and let's say you open up your first position at a 2 lot, and then you open up your next position at a 2 lot, and you open up your third at a 5 lot. If that third position goes into drawdown, that lot size is much bigger than the first two. So if it goes into drawdown, your floating profit will not be enough to sustain the pressure of that third order going into drawdown. And that may cause you to lose the whole trade overall, or cause you to go into significant drawdown and then put your entire profitability at risk. Okay, so it's not worth doing that. So if you open up a position, guys, make sure your first position is always your highest position. If it's not the same lot size, make it bigger. All right, if your first position is a 1 lot, your next position better be a 1, next one better be a 0.50, 0.75, whatever it is, and make them smaller. Don't go down or go up in positions and then go up in lots. That's backwards. Okay, if you go up in positions, you go smaller or the same. Okay, just to keep the risk as low as possible. You're already adding risk to your account by adding positions. Don't add more risk by adding bigger positions than the ones that you already have running. Okay, that's backwards. It's hustling backwards. Your profitability is backwards, and if the market even goes against you even a little bit, it's going to really throw off your psychology and then throw off the whole trade and make you want to potentially exit the trade or close out one position. And then as soon as you do that, what's it going to do? Flip and go in your direction, and then you're going to be mad. All right, so be smart about it, guys. Don't add too much risk to your account. If you're a new trader and you're just starting out, you shouldn't be doing either one of these, right? You should just be using that one position to kind of get your feet wet, build up a little bit of consistency within your account. Look for where you're winning, where you're losing. Make sure you're journaling and whatnot. And when you journal your trades and you say to yourself, okay, I took a trade here at this high, I saw that price came all the way down here. Well, if I got out here, or I got out here, I got out here, how can I learn from that and be able to potentially stack my orders next time? Or if I'm an intraday trader or a swing trader, how can I potentially learn to scale into my orders so that way I can get a little bit more out of the same move? Okay, these are the questions that you should be asking yourself at all times when you're trading. All right, guys, so that's just a basic synopsis of what scaling and stacking really is, what the differences are, what styles of trade to really use them for, and how to maximize your profitability. The only similarity really between scaling in and stacking is that you maximize your profitability on a move. That's it. Instead of having one position running and grabbing maybe 50 pips on a move, you can have that same position, and instead of grabbing 50, you really got 75, or you really got 100 or 150, whatever it is. You know what I'm saying? So you just maximize your profitability within the same move. But on the flip side, you're adding more risk to your account. So that's something you have to ask yourself before you enter a trade. All right, guys. So hope you guys like this video. Hope you guys learned something from it. Please like and subscribe, and I will catch you guys on the next one.